Investor's Edge with Gary Kaltbaum. Straight talk about you and your money. Now from the BizTalk studios, here is Gary Kaltbaum.
And welcome once again to Investor's Edge. I'm Gary Kaltbaum, your host. Hey, thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. It is January 23rd. It's Tuesday, 2024. Thanks for joining us. First off, thanks to Adam Sarhan for handling the show. Yesterday had some things to do, and I'm actually going to miss a couple of days in the next 3 weeks because I have things to do and all that fun stuff. Hey, in case you don't know, this is Investor's Edge. It is the most important show on the markets on this earth. We specifically direct you on what to look at, what is leading, what's lagging, what to avoid, where it's going. And I say that and I mean it. Take any other show you will see on business and on the markets. There is nothing more specific than what we do and how we do it. And more importantly, when right, let them run. When wrong, be wrong fast, be wrong small. And put our butts on the line. Specifically tell you when we think the market's hitting a low, hitting a high. Where's the leadership? Where's the laggardship? What to avoid, as we said. And the best one we've done and we try to be very careful on, how do I put it best? What we did on January 5th, in advance of January 8th, which we had no idea would happen January 8th, just on NVIDIA. And we specifically said to you, if it breaks above 506, and we told you institutions would pile in, would jump on it. 506 to 599 as I speak. In 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. But that's just one. And on the other side, avoid. What have we been telling you for the last year to avoid? China. Last few months, oils. And guess what they've done? So you can take the rest of the shows that booyahs and all that and compare and contrast. There's no more important show than this. And we're hearing it from the many. Big time for the many. And you know, we listen back to every show, and we're very careful about what we say and how we convey things. And we are thinking to ourselves, maybe a little bit more on the NVIDIA side when things show up. Remember, NVIDIA was an outlier. It's not very often you get what was arguably the number one tech stock in the market breaking out of a 6-month trading range with monstrous earnings and revenue growth. And of course, then you had others follow. Microsoft on the breakout, Facebook, AMD, Broadcom. And we'll continue to tell you as we move forward. And we will continue to tell you what to avoid as we move forward. We nailed the inflation for you. We nailed the bear market for you. We nailed the bottoms for you. Just in the last 3 months, avoid July to end of October. November 1st, we said, we think a low's potentially being put in here. And boom, that day was the confirmation day. And then we had a 1-month lull in the broad market. And on Thursday of last week, we came on here and say, just want to let you know, the broad market may have woken up. But leadership remains in technology. And guess what? That's what's going on. Now, I want to bring up something on technology to give you, I'm going to call it kind of sort of warning shot. The kind of sort of warning shot. All we own right now is technology. All we own is technology. And we are making some good hay in January. Technology stocks as a percentage of market cap in the S&P is breaking records like we have never seen. That's what is known as over-owned, over-loved, over-leveraged, and potentially overpriced. We have mentioned Apple's trading at 30 times earnings, when throughout its history it traded maybe 15, which means earnings better do better. And I can go through others. We're just letting you know, we don't think it's today, we don't think it's tomorrow, we're not so sure it's near. There will be a point in time, because technology is so much of, eventually it's going to be less so. Because what you have right now is investors tend to continue to pile in at any price on what is working. And unfortunately, they did that with the GameStops and all the crap of the world. Be ready. Just like in 21, in the middle of 21, we came on and started telling you, hey, just letting you know. I got 5 names in tech, leadership, technology names topped out, breaking down. And then every other day, 10 more, 12 more, 15 more, leading us into November, when so many were already getting hit. November, they took them all down, and we nailed that for you also. And this comes from scanning 1,500 to 2,000 stocks a night, 200 sectors, every country, every commodity. That's what it comes from. And as I said to you, boy, if I can find 5 charts a year like NVIDIA, I'd be a happy camper. Not very often. We just had one more, and right up front, we missed it. SMCI. Because on earnings, it gapped up and gave us a shot, but within 3-4 minutes, just ramped like crazy. Broke out at 358. You ready for this? 457 at the close today. 3 trading days. Why? Just what we tell you. Monstrous acceleration of earnings and revenue. Monstrous beats of earnings and revenue. Now, that was early guidance. They're going to report in 6 days. We'll see what happens. And I have not had a shot to get in. The reason why I haven't touched it, trading 30, 40 bucks a day in a spread. Today hit a low. Ready for this? Of 416, closed at 458. Yesterday hit a high in the morning. I'm not making this up, at 486. Hit a low of 410, 76 points. Closed at 436. I don't know how to play that. There's no pamphlet. Hopefully it gives a secondary pie point. Now, also, we're in the midst of earnings season, and that's the other part of the equation of what we do. Every earnings report, we are all over, and we're looking for strong earnings and revenue growth and big beats of the expectations, and more importantly, the reactions. Stocks that gap up big or break out big versus the ones that get smoked. For instance, today, you had a couple of things both ways. You had Procter & Gamble up 6. For Procter & Gamble, that's a lot. On the other end of the spectrum today, and by the way, these are the things we look for on a daily basis. You had 3M down 12 in the Dow. Both are in the Dow. Again, this is what we look for. We'll let you know. And then you have some outlier things, like a couple of Thursdays ago, when we said we thought there was a climactic top in the crypto because the ETF was already out and they've been crushed. The MicroStrategies, the Coinbases, and the like. So we'll keep doing what we're doing. We hope you keep listening. And we're working harder than ever because we love what we do. For instance, today there is a chance the housing complex may have topped out. D.R. Horton reported earnings. Stock was down 10% today, almost 10%. Symbol DHI. And then in relation to that, things like BLDR. Guess what they do? Construction, down 6%. MLM, that was down $8 today. Cement. LII was down $12 today. Guess what? Heating, ventilation, air conditioning, and things like that. So housing related. I'm going to go over it a little bit later. This is what we do. This is how we do it. And we don't mess around. Up next, the markets today, and much more. I'm Gary. This is the one and only Investor's Edge.
Hi, I'm Gary Kaltbaum, host of the nationally syndicated radio show Investor's Edge. We're not just handsome radio people. We manage investors' money for a living, specializing in fee-based discretionary money management. No big commissions, just a fee on the assets that's managed. We also provide a full range of personalized services, including retirement planning, fixed income, and educational needs, all to assist you in achieving your financial goals. Understanding not all individuals have the same needs, we'll carefully evaluate your personal goals to determine a proper investment strategy. If your current approach to investing is not getting you to where you would like to be, call us to make an appointment for a complimentary portfolio review. The number to call is 888-422-5559. That's 888-422-5559. That's 888-422-5559. Investment advisory services offered through Kaltbaum Capital Management.
It's time to switch on the integrator units and get the brain cells working.
You're listening to...
Hey, this promises to be fun.
Investor's Edge.
The last bastion of quality programming.
With Gary Kaltbaum.
It doesn't get better than this.
All right, welcome once again to Investor's Edge. In thy news, well, they're in New Hampshire now, and if Trump has a big night, it's pretty much party. But look, Trump is looks like he will be the candidate against Joe Biden. I do not take back what I've been saying. So both sides dislike me. I feel like it's the Ebola virus versus the bubonic plague. There is nothing I like about Biden, and there's nothing I like about Trump. I know he has some good policies. I like the lowering taxes. I like the less regulations. I like the border. Everything else, you can take them or leave them as far as I'm concerned. Oh, he did some things for Israel. And then he says some anti-Semitic crap. Well, when did he do that? Oh, he did. That doesn't matter. We get what we vote for, and we'll have another 4 years of either Biden or Trump, unless my prediction becomes true, and that Biden is not the one that ends up running. If you notice, you can't even find him. Have any of you seen him? I haven't. And the only reason why he isn't hated more is because the media protects him and his lies. They used to, all of Trump's lies, they used to write them down, publish them every day. Biden, they let go. My other problem with Trump is I can't stand the people he surrounds himself with. I want to vomit at the Roger Stones of the world, who, by the way, is on tape wanting to murder Swalwell and somebody else. But whoever wins, we will compliment them when they do something good. We will blast them when they do something bad. How we got here with these two, I don't know. Yeah, I do know. Anyway, that'll be that. So I'm pretty sure, I don't think we'll have surprises, but maybe. And then if there's a decent thing for Nikki Haley, she'll stay in. Well, she'll stay in no matter what. And I'll tell you what else I can't stand about politics. You ready? You're running against Trump. You're scum, you scum, you scum, you scum, you scum, you scum. Then you bow out. Oh, Donald, I love you so much. I'm endorsing you so much. Big time. Yay, yay, yay. Trump, you're scum, you scum, you scum, you scum. Oh, you're endorsing me? Oh, come on over. Give me a kiss. And by the way, that's both sides, of course. All right, that's enough of that. Israeli news. Israel proposed a 2-month ceasefire to the scumbag, sleazebag, dirtbag. They're not even human beings. Hamas terrorists. Hope they die and rot in hell. So they won't go for a ceasefire. So I hope Israel goes in there and just blows the terrorists the kingdom come. Israel has moved around less soldiers. You're not hearing as much. Do not believe a word out of the Hamas about how many are dead. They just remember. Oh, yeah, what we do is rape women, and as we're raping them, we shoot them in the head, and then we videotape it and send it to their relatives. Oh, but by the way, believe us when we tell you how many people are dead here. Anyway, that's what's going on. Before we get in the market news, Reddit. I have never really been on Reddit, but I'm going to have to go on and see what it's about. Reddit is going to do an IPO. They want a valuation of $15 billion. What's the problem? They've never been profitable since it was founded in 2005. $800 million in revenue. I'm being told, I can be wrong. I'm just telling you what's being told. Do you know what the letters NSFW mean? Not safe for work. Supposedly, a lot of the Reddit, there's a lot of subreddit things where there's a lot of, I don't know, porn type stuff in there. Anyway, I'm going to have to check it out. I'll let you know what I think. But they're going to try and go public. Of course, just another one that's losing a ton of money. Letting you know. Oakland. We've been covering Oakland a lot. You know what In-N-Out Burger is? It is like a burger institution out west. I know they're coming towards east a little bit, not in Florida. I've only eaten an In-N-Out Burger once as I was driving from Vegas one time, and I stopped, and it was really, really good. They're leaving Oakland. We're getting the hell out of here. We're profitable, but our employees are sick to their stomachs. They're worried about crime. We're gone. Just another one. And if you notice, nobody says anything. The businesses leaving downtown. And have you heard any journalists, have you heard one journalist earn their keep and ask Nancy Pelosi, why aren't you doing something about San Fran, our district? You know why they don't ask? Because they're a bunch of wimps, and they don't want Nancy to be mad at them. Just letting you know. Just letting you know. Harvard, still going on. Hostage posters at Harvard defaced with anti-Semitism. Harvard doing nothing about it. And we're hearing Harvard's trying to do, we're going to see what's going on with anti-Semitism. You know who's heading up the commission? An anti-Semite. Gosh. Harvard. In the news, 56 million credit card holders have now been in debt for at least a year. That's a record, just letting you know. And you already know about the credit card numbers. They have skyrocketed. Market doesn't care. China had a good day today. We've been telling you to avoid China ADRs, except a couple of names. They were up decently today. Do you know why? China's considering tapping almost $300 billion to rescue the stock market. I wonder if Jay Powell called up the people in China and said, I can help. No, not kidding. Fat Burger. You know, California, they just initiated a $20 an hour fast food wage. Fat Burgers announced, I guess there's a bunch of Fat Burgers in California. They're trimming hours, eliminating employee vacations, and raising menu prices. Repercussions. The leading economic index declined for the 21st month in a row, the longest down streak since 07-08. Market hasn't given a crap, which is quite amazing. We'll let you know the day the market starts to give a crap. No, really. You know how the Bitcoin Grayscale Bitcoin GBTC, they were really gung-ho on getting all these ETFs of Bitcoin. Investors cashed out $2.8 billion from them to go to other things. Not smart. And I think I'm done. That's your absolute unadulterated news of the day. I'll save the rest for tomorrow. I had a few others. It just comes across my desk. The markets. I got to tell you, there's a simple rule we have. We didn't make it up. The greats made it up, and we just learned from the greats. One of them is weak opens, strong closes. That'll be up next on this, the one and only Investor's Edge.
Listening to
America is talking.
Investor's Edge.
He's got to be pleased with that. The crowd is just on its feet here. He's a Cinderella boy.
With Gary Kaltbaum.
Comes highly recommended. You're going to feel better if you talk to him.
All right. All right. First off, what we're going to be watching for tomorrow. Netflix reported after the close. Now, let me explain Netflix. Hit 485 in July. Hit 483 in November. Hit 501 in December. Just hit about 502 2 weeks ago. Has tightened up over the last few weeks. You know what that means? Not trading all over the map. What we call some sort of a breakout is around that 501, 502 area. Even though the high was 503.41 on January 11th, it finished like at 490 something, so we'll call it 501, 502. In the aftermarket right now, with the stock closing at 492, it's trading at $529. They actually missed estimates, but they say they're going to beat estimates for this quarter that they're in. So that'll be, if nothing changes, a really kind of sort of nice gap breakout tomorrow. If nothing changes, you're going to have a conference call and everything. This is the type of market that you like seeing those things. Most people would hesitate to buy on the gap. What we will be doing in the morning is seeing where it opens, because it can change. We'll go through the numbers tonight. And we'll see how it trades in the first part of the market. It's not going to be like super micro SMCI, because that's really high beta all over the map type of thing. And Netflix is much bigger, but definitely this becomes a candidate in the morning. On the other end of the spectrum, one of the weaker semiconductors, Texas Instruments, closed at 174 and change. I got it at 165 and change in the aftermarket on that. As we head into big time earnings season. Oh, Intuitive Surgical reported. Let's see what that's got going. Flat in the aftermarket. That's not normal for that stock. Usually it's up or down big. And some late breaking news right around 4 o'clock. And it's kind of stunning. The CEO of Alaska Air says the company has found many loose bolts in the Boeing 737 MAX 9s. Holy crap. I could say that, right? One more time. Holy crap. Boeing had better get their act together. I'm just going to suggest they have dodged a gargantuan bullet. In 18 and 19, they had 2 crashes. I believe it was Indonesia and Ethiopia, where I think it was somewhere in the between 300 and 400 people perished. And I know they mean well, but have they not learned the lessons? A door just blew off a jet. Luckily, at 16,000 feet. If that blew off the jet at 30, holy crap! They're also lucky nobody was in that seat next to it. One kid had his shirt torn off. And now the Alaska Air CEO says they're finding many loose bolts. I got news for you. As an investor, I don't give a crap what Boeing. I won't invest in that sucker. I don't care what the stock does. Number 1 job of Boeing Airlines, safety. Number 2 job, safety. Number 3, safety. Top 10 job is that safety. Loose bolts. And then who's doing the inspections? That's got to be on the airlines too, right? All right, we move on. But man, oh man, I fly Boeings like that's all I fly. When I fly up to New York back to Florida, I'm on the 737. I'm not the Maxes though, I guess. I think. Okay. Dow down 96 today, but pay no attention unless you have some bad Dow stocks today. And again, Goldman Sachs, bad action. Goldman Sachs has been trying to break out and failing. Bad day for the housing-related stuff. Home Depot was down 6. I mentioned 3M. Bad stock gets worse, down 12. But on the good side, Procter & Gamble up nicely. But S&P up 14, what, with the Dow down 96. Why? Broadcom up 6, Microsoft up 2.5, Facebook up 3.5, Nvidia up 2, Apple up 1. Apple, another addition today to some analyst thingamabob. They went from ugly to beast to beauty in about 3 weeks. Why? Because the stock's going up again. And I'm just wondering, is Apple going to gap up too on earnings in the next couple of weeks? That's going to be interesting to see. And I looked at what the estimates on Apple were. Earnings are growing again. Not necessarily sales, but earnings are growing again. But anyway, another good day. We had another good day today, but they were all down early. And that's what we really love seeing. Broadcom, for instance, at a low today, hit 1203, closed at 1226. Just what you want to see. Only up 6. But as we said, as we went to break, by the way, we never really go to break because we don't go anywhere. We're here. We love when things open, strong stocks open down and finish up. It gets rid of sellers. We love that. We'll take that every day of the week. And they did it with everything today. Nvidia hit a low today of 585, closed at 598. It was down $11, finished up 2. Again, we'll take all of that they want to give us. It's one of the rules, take that back, one of the characteristics of bullish phases. And as we have said to you, what's a characteristic of the bear phase? Open hot, sell it off. That's distribution. That's institutional selling. So another good finish. NASDAQ up 65, NASDAQ 100 up 73. Yay. And that freaking SMCI up another 21 today. And I don't own it. And believe it or not, I haven't even contemplated. It's just so extended near term. There's nothing for me. I got to stay disciplined. Housing. We sold our housing ETF for the second time. I think around 102. It's 99. We bought it back perfectly in June, sold it perfectly in August, bought it perfectly again in November, and just sold it again. and it was down 5 today. Wondering if housing and housing related is getting in trouble. Remember, reaction to earnings are everything. D.R. Horton was down 14.5 today, 9.25% to 143. I believe Lennar reports. No, they already reported. Somebody else reports this week, I think. And then, as we stated, other areas housing related got hit, so I got to do a deep dive onto that tonight. I can't say a major top is in just yet, but we'll call it not a good day, and we lucked out getting out of it. By the way, it was the ITB. It's just the exchange traded fund for that. Getting back to China. Oh, by the way, gold miners also, that's an avoid, though near-term low probably put in today. When we say avoid, they're just not in uptrends. The China stocks. So I said earlier, they have been mushed, they have been mashed. I don't know if you know this, but the FXI, it's an exchange-traded fund. It's trading where it traded in 2005. That's how weak it is. We're going to stay on top of it. Do you know why? It's that bad. And China has problems. They have property problems, whatever. And I don't like the fact that it rallied 4% today because China government's going to step up who's done everything wrong. But we'll watch it. There are few names that stick out that are very strong versus Baidu and Alibaba have been absolutely destroyed. They were up today 5%. Not sure that does the trick, but we'll let you know. Always looking for changes. Up next, more of this, that, and the other thing, or whatever else. I'm Gary. This is the one and only Investor's Edge.
You're listening to
What are we waiting for? Well, what are you waiting for? 1, 2, ready, go.
Action!
Investor's Edge with Gary Kaltbaum.
And welcome once again to Investor's Edge. You know, I read cover to cover the Wall Street Journal. Yes, the New York Times. I don't read every article, but I go through every article, and sometimes it's just the first paragraph because what do I need to hear about Travis Kelce and Taylor Swift? But it's amazing some of the things you read on a daily basis. You know this Bob Menendez, this stupid politician? He's now whining, complaining that, yeah, I know you found gold bars in my house and a bunch of, other evidence that says I'm a freaking sleazebag and a crook, but you should drop the evidence because you shouldn't have been there in the first place. I just love people. He had a bad thing happen years ago, and they still elect him. I don't understand. I don't get it. I really don't get it. So much sleaze in D.C. I don't even know where to go. On a daily basis. What else? I'd still avoid oils. Most all. I've been mentioning the pipelines and things like that look okay. But I'm a big believer, why am I going to buy pipelines and oil if oil is in a bear market? And leave no doubt, we've kept you out of them. They're just in plain old bad shape. And then the good news is, remember, we're looking for uptrends versus downtrends, and we can tell about a market by how many and where. And last Thursday, you had the broad market wake up a little bit, but I don't know if we're off to the races. The good news is there's some names and some areas that are off to the races recently, namely the tech, AI, software, areas of the market that will probably have to settle down real soon. Once something gets a little extended to the upside, but right now couldn't care less. I think every stock we own right now is extended, and they hardly even pull back, which is good news. We love stocks that go up, make a right turn, not even pull back. Earnings. Let us not forget. Just this week, and I just mentioned Netflix and Texas Instruments, tomorrow will be SAP, Defense, General Dynamics, big semiconductor, ASML Holdings, big managed care, Elevance, IBM in the Dow, Lam Research, very important semi, CSX, the rail, Ameriprise, important financial, ServiceNow, important software, United Rentals, one of my top most important names I follow in economic sensitives, Tesla. And get this, earnings estimate for Tesla, 73 for the quarter cents versus $1.19 a year before. And by the way, Tesla stock is very, very weak. Las Vegas Sands and Casinos, Raymond James. Blackstone, Alaska Air and American Airlines, Dow Chemical, Sherwin-Williams, I hear they got nice paint, Union Pacific, another rail, Intel in the Dow, Visa in the Dow, American Express in the Dow. You should see my American Express bill. Western Digital, KLA Tencor and the semiconductors, Capital One Financial, Discovery just got smoked on their earnings report, so it'll be interesting to see what Capital One does. Norfolk Southern, another big rail, and Caterpillar, which is my number one economic stock to watch. That's just this week. And then, holy hell, next week when we get the Apple's, Amazon, Google's, Microsoft, which is like 90% of the market. Okay, that was sarcasm. But you get my point. You know, they've been talking Magnificent 7 this, Magnificent 7 that. It's not the Magnificent 7 right now, I can promise you that. But if Apple gets going again, and I got to tell you, that Apple looked like it was having problems, and it's just straight up for 4 days. Just so you know, in the last 4 days, while the stock got kicked in the teeth from 200 down to 180, 3 analyst comments. Everything's great. Do you wonder sometimes whether this is rigged or not? Stocks getting trashed and 3 analysts coming out, no, it's all good. I hope they're right. I trust none. Just remember, analysts. One of the greatest industries of conflict of interest I have ever seen. One of the greatest industries of conflict of interest I've ever seen. Number one being our politicians. Analysts probably in the top 10. We hardly pay attention. Unfortunately, we have to pay attention to reactions because they still move things. And do you know how you know you're in a bullish phase? When a stock goes up on an analyst downgrade, you know how you know when you're in a bearish phase? When you get an upgrade after upgrade and the stock keeps going down. The little things that we watch. Interesting enough also, 10-year yield is up to 4.142. So the market really hasn't gagged on that. Interesting, because I've been telling you forever, as yields go up, markets go down. As yields go down, markets go up. Big correlation, until the correlation decides to change. I can tell you for a couple of weeks now, in spite of, market's in decent stead here. Now, the declining 50-day moving average on the 10-year yield, you're right at it. It'll be interesting to see what happens if we break through and start heading towards 4.5. Why? The higher it goes, the less a chance the Fed is going to lower rates. We'll see how that goes. Anyway, Tomorrow I'll be on with Charles Payne, 2 p.m. hour, Fox Business Network. Don't miss that. Same time tomorrow, this show. You have a great evening. Drive carefully. When you get home, do like we do. Quite simple. Make sure you hug your family. Make sure you hug your children. They will feel better. You will feel better. I promise. As always, thanks for joining us. Hopefully better days ahead. I know we're not going to get better days out of D.C., hopefully from us. Take care, all. Thanks again. Bye-bye.
This has been Investor's Edge with Gary Kaltbaum on BizTalk. To listen to past episodes or to get in contact with Gary, go to GaryK.com. That's GaryK.com.